Well, in a bid to meet the 3.3% fiscal deficit target, the government is planning to tighten its purse strings. Data released just last week shows that the centre has already breached 104% of the full year's fiscal deficit target versus about 89%. That was the number last year. But the government is hoping for higher direct tax collections as well as expenditure savings. They don't want to use the word cuts, and subsidy rollover to offset the shortfall in GST collections. Sapna Das, who broke that story, joins us now with the details. So Sapna, give us a sense of what the strategy is going to be on part of the government to try and get to that 3.3% fiscal deficit target.
Well, as every year, we're given to understand that, management of the fiscal deficit is very important. And having said that, a broad strategy which is there on the table, as you have rightly pointed out, some bit of rollover in terms of the additional subsidy burden that has come in, some bit of national savings on expenditure, some bit probably in terms of depending on higher direct tax revenues in FY19 if there is any revised estimate that the government would like to put out. And last but not the least, and that will be pretty critical in terms of bridging the GST revenue gap. Compensation cess may be utilized for the first time, that kitty may be utilized for the first time if the GST Council gives a nod for that. So these are the four broad elements. Of course, the minor points are far many in between. Like there is a worry on other non-tax revenues as well, including disinvestment and, always that expectation of an interim dividend from the Reserve Bank of India, so on and so forth. But very quickly, 20 to 25 odd thousand crores is what the government is expecting conservatively as national savings coming in on the expenditure side. We're given to understand that not too much of an additional demand has come in from many ministries. Some of the ministries, for example, like RD, that has asked for higher Manrega allocation of around 8,000 odd crores. That probably will be met by internal accruals. Subsidy rollovers, the amount in petroleum is pretty well known. Here we are given to understand that around 10,000 odd crores is what the government will be comfortable giving in FY19, but that also is not happening now. That will be deferred to March. Apart from that, the critical area, just coming very quickly to GST. This was always a given. Last couple of months, the revenue shortfall has been spoken about, around 6 to 7 odd thousand crores worth of monthly gap. So if you look at that number, you are already looking at 72 to 84 odd thousand crores worth of GST shortfall for FY19. Can the government afford that? Not really. So what is the way out? Possibly a compensation cess kitty may come to the government's rescue if they decide to utilize that, and for that also they have to take the GST Council's nod. Earlier in the year, in sometime July, August, the government had gone ahead with an amendment which said that as need be, this money can be apportioned on an ad hoc basis between the centre and the states 50-50 if this money remains unutilized. We're given to understand that 55 to 60 odd thousand crores was there in the kitty as of October end. The budget target is to step it up to 90 odd thousand crores. It'll be interesting to know whether the government goes ahead and utilizes that in some way or the other.
All right, Sapna, appreciate you joining us. That is some sense of the strategy that the government is going to adopt to try and get to that fiscal deficit number. Joining us now to discuss that, Madan Sabnavis, Chief Economist at Care Ratings, and Upasana Bharadwaj, Senior Economist at Kotak Mahindra Bank. Appreciate you joining us here on CNBC TV 18. Before I get to the strategy outlined there by Sapna to try and get to that 3.3% fiscal deficit number, let me start by asking you about what you made of the GDP data, the second quarter GDP data that's come in at a three-quarter low of 7.1%, and what that tells you about what we could expect in Q3 and Q4. In my conversation with the Vice Chairman of the Niti Aayog, he was concerned. He believes that Q3 and Q4 are likely to be impacted more than Q2. So given that picture and given the fact that so far government spending has been buoyant, but it may not continue to be so, what's your own expectation about growth? Madan, if I can start by asking you.
No, in fact, we were quite disappointed with a number of 7.1% because we thought that the number would be closer to 7.5%. Now, given the fact that in Q3 we have already seen that there are certain liquidity strains which are telling on certain segments, especially like the SME segment, we would tend to believe that while growth would probably be on path in Q3 and Q4, we would be in a region of around 7.3, 7.4%. It will never really exceed that particular mark. So we're looking at an overall growth rate of around 7.4% for the entire year. That is scaled down marginally by 0.1%. So it would be a kind of a drop down given the Q3 phenomenon of liquidity.
Okay. Upasana, let me put that question to you as well. What is your number as far as the overall growth picture for the year is concerned, and have you cut your growth forecast also?
Yes, Shireen, largely, we were looking at a 7.3% for the full year earlier. And after the recent, downward surprise to the second quarter GDP, we're looking now at a 7.1% for the full year. And clearly, we were, in any case, not looking for Q3 and Q4 to be that great. One, of course, was the fading of the base effect. But apart from that as well, we know that there has been a liquidity and a credit issue, which was expected. Along with that, of course, we know that there's a lagged impact of all the tighter monetary policy that has happened. So all in all, we were looking at a much slower pace in the second half of the year. And to top it all, the second quarter has just worsened the scenario. So I think definitely it would be a tall task to imagine a growth averaging 7% plus in the second half of the year. And hence, we've revised our numbers to 7.1%. Just one quick point on the fact that the overall GDP of the slowdown, it's support on agriculture, if you see. So the private sector has shown a significant slowdown. And that is where the worrying part is, because we were in any case expecting that to happen in the third quarter. But, even before we really started seeing the crisis, we've, the second...
Yeah. You're absolutely right. Upasana, I'm going to come back to you. We're on a scratchy line with you. We'll try and reconnect. But, Madan, let me come back to the point that Upasana raised there. That, the sectoral issues that you alluded to, that Upasana also talked about, whether it has to do with liquidity or the NBFC situation that we're seeing, that hasn't played out in the second quarter. That's going to play out only in Q3 and Q4. If you're disappointed with 7.1 and your expectation was 7.5 to 7.7%, what becomes of private consumption given what we're staring at today?
See, there are two parts to it. One, if we're talking of growth, it's going to come from consumption. The second is from investment. Now, in terms of consumption, we have seen that if we just look at whatever information we have on the retail sales during the festival season, at least in the urban areas, it's been fairly positive. In terms of farm income, while it hasn't been as buoyant as what we expected, I think but it's definitely, again, another kind of a positive which is coming from there. So I think consumption expenditure is probably going to be one of the drivers, but not in a very big way. And in terms of investment, we're back to saying that the government is going to play an important role, because we have seen that the two segments of the GDP, both public administration as well as construction, they have been driven primarily on account of the impetus given by the government. And in case that is sustained, we could probably look at these numbers of 7.4% for the rest of the year. But in case the government cuts back, like the issue which you have raised in the beginning about the imperativeness of maintaining the 3.3% number, if there's any kind of a compromise which is there on capital expenditure, because that's the only discretionary part, then I think one will have to rework the GDP growth numbers.
Okay, Upasana, let me pick up on that point. What we are given to understand, and this is source-based information, that the government is looking at expenditure savings or natural savings of at least on the conservative side between 20 to 25,000 crore rupees, and that's part of the strategy to get to that 3.3% number. If that were to be the case, and if that number were to in fact be higher, how much more concerned would you be on growth?
Yes, of course. So one side is whether the government will achieve the 3.3%. There are a lot of challenges. GST run rate obviously is not good. Overall, we are looking at centre's own slippage on account of just GST to be around 80,000 crore. Now, if that is the case, of course, there could be offsets to RBI's interim dividend or expenditure savings, as the government has just recently pointed out. Divestment targets, I believe we may just about meet it, but again, there are risks to that yet. And even if direct tax collections are there, as of now, we are just at the same growth rate as has been budgeted. So, yes, we'll have to see how exact tax collections improve. The run rate as of now is just budgeted numbers. So, it's not yet very easily achievable, but yes, the rollovers of expenditures into April could definitely help them achieve a 3.3%, but we are still going with a 3.5% for the year as of now. Having said that, any postponement of expenditure clearly is negative, further negative for growth. So that also needs to be accounted for.
Okay. All right, so you're going with a 3.5% number for fiscal deficit. Madan, do you believe that they will be able to manage 3.3, or do you have a higher number as well for the fiscal deficit?
No, in fact, I think since it's a statistical number, 3.3% definitely seems to be something which is attainable. We should also remember that in the past, governments have rolled over expenditure because we have this curious system of accounting where government accounts go on the basis of cash, whereas you have accrual basis for corporates. So that's how you normally roll over your subsidies. So I think that could be one particular chunk which could be rolled over, which will not really impact capital expenditure and growth. But at the same time, since it's a transfer payment, you will be quite safe in terms of showing a number of 3.3%. So I think it will be a combination of these measures to ensure that 3.3%, which has been held sacrosanct by the finance minister all through, will be attained.
Absolutely. That's the indication that we get as well, that there will be a rollover of subsidies, specifically the demand that's been made for LPG and kerosene, the additional demand that's been made by oil marketing companies, that will be deferred to beyond March. But Madan and Upasana, a quick question. On the cusp of the MPC, what would you go with? Of course, status quo is what the market seems to be estimating at this point in time. But in terms of commentary, what would the expectation be, Madan?
No, in fact, we have a slightly contrarian view out here. While we don't expect the repo rate to be touched, the stance is definitely going to change to neutral instead of the calibrated strengthening which they had spoken of earlier, since the oil fears have receded. And we think that there will be a 50% chance of a CRR cut of 50 basis points in order to assuage the liquidity situation. Well, they have done OMOs and they have announced OMOs, but I think there would probably be some pressure to also cut the CRR, which could be done by 50 basis points this time.
Okay, Upasana, do you also believe that we are likely to see a CRR cut, albeit a 50 basis point CRR cut? And do you believe that a change in stance to neutral is also likely?
Well, actually, if you look at the circumstances over the last 2 months, the way markets have moved, the way oil prices have moved, the kind of downward surprises to inflation that has happened, clearly the RBI's own inflation trajectory has to be revised significantly lower. Having said that, it's only...
Yeah, lower.
Really change their stance. Would they again sure given RBI that they tend to be much tough to bring in and probably especially because
the top story this evening, the United States and China have agreed to call ceasefire on their current trade war for 3 months. The breakthrough happened on the sidelines of the G20 meeting in Argentina. Now, China's foreign ministry claims that both the presidents have told their economic teams to work towards removing all tariffs. And in fact, Donald Trump took to Twitter to say that China has agreed to reduce and remove tariffs on US cars. Currently, China is imposing a 40% tariff. Trump also postponed the additional tariffs worth another $200 billion, which were to take effect on the 1st of January. CNBC's Eunice Yoon reports from Beijing on the trade truce and how China is reacting to this news.
Well, right now it looks as though the Chinese are waiting and watching to see what the U.S. does, and that the two sides are going to get into these negotiations and try to figure out whether or not they can work out their differences. So from the White House's perspective, according to their statement, the talks are going to center on some of the issues that the Americans have had problems with the Chinese, what they've described as unfair trade practices, forced technology transfers, for example, as well as non-tariff barriers and cyber theft. The Chinese, though, have are painting it in a bit of a different way, where they haven't ever acknowledged that they engage in these types of practices, and instead say that the focus of the discussions are going to be more on opening up, on market access, on ways in which they could buy more American goods. So that's more of the focus of those discussions. And because of the fact that the two sides haven't really been so aligned in the way that they are presenting this information, there's a lot of speculation now that the two sides are going to have a really rough go in trying to come up with any sort of agreement in any timely fashion to continue to keep the optimists happy that perhaps the two sides would be able to reach some sort of agreement.
Now, today, Finance Minister Arun Jaitley made a fresh pitch for calling for open borders. Now, addressing an event in Delhi today, Jaitley stressed that cross-border trade is an economic imperative of the present times and it will only increase in the days to come. He said that it was in the interest of every country to bring down trade barriers.
In terms of countries, no nation can produce and manufacture all product. It can't specialize in all forms of services. And therefore, trading across barriers of nations is the economic imperative of all times. And this is going to increase with times to come. It is in the larger interest of every country to make sure that trade barriers are brought down to the extent it is possible.
Well, we'll break now into the Sun Pharma con call that we had earlier indicated. We understand the shares, of course, tanked in trade today on the back of speculations that SEBI had reopened the insider trading case. Let's listen in to what the management has to say.
Corporate governance issue at Sun Pharma. Let me reinforce that we follow high level of corporate governance at Sun Pharma, which is expected from a company, global company of our size. We are constantly evaluating how to further strengthen our corporate governance to meet investor expectations and also changing regulatory environment. We had issued a broad clarification on these issues to the stock exchange some days back, but based on the feedback that we've received, we feel that more clarity is needed, and hence we are holding this call today. We've spoken to many large investors, some analysts, as well as some senior media personnel, and we are well aware of the potential questions that all of you may have. We will try to offer as much clarification as possible to your queries. Let me now address the specific issues raised in this note. One of the points related to an audit firm, Valia and Timbadia, wherein it was indicated that one of the partners of this audit firm was investigated in a stock rigging case. The matter being referred here is about 20 years old, and none of the partners of the audit firm or the firm itself were a party to this investigation. They have been our auditor for a long time. The audit firm audits some of our small subsidiaries. Let me also clarify that the subsidiaries that this firm audits are non-material subsidiaries for us. Further, all such subsidiaries put together account for only 0.6% of our consolidated revenue for the FY18. Moreover, audit is conducted in accordance with the applicable law. Given the small size of these individual subsidiaries, it's sometimes not practical to engage any large global audit firms for them. However, we are open to looking at ideas which will address investor concerns related to ensuring confidence in the numbers that we share with you, which might include introducing additional audit firms or new audit firms in these subsidiaries. Lakshadweep is an investment company of Mr. Valia. As per the then legal advice received by us, we classified the same as a non-promoter entity and disclosures were made accordingly. However, even if it were to be classified as a promoter entity, it does not materially change the current promoter shareholding. Further, as a concern has been raised, we are in the process of seeking a revised legal opinion on this matter. The other point refers to Sun Pharma appointing German Capital to co-manage its FCCB issue. There are also some questions raised on the subscription of the FCCB. The fact is that the security firm which has highlighted this issue last week has not mentioned that the JP Morgan Chase was the lead manager and sole book runner, and German Capital was only co-manager. This is also a historic issue dating back to 2004, about 14 years back. One of the points raises questions regarding relationship between Orbit Investment Services and Investment Trust of India. The investments made by these entities may be private investments made by independent parties, and Sun Pharma is not privy to that information. Another issue pertains to Sun Pharma lending some money to 4 individuals without security. This is also 20 years old, which happened in 95-96. The amount of money involved also was very small, a few lakh rupees, and was fully recovered. The company conducted business as per its policy guideline and in accordance with the applicable law at that time. If at any point of time any loan was extended to an individual per then prevailing guidance of the company, those loan accounts have been closed after receiving all the receivable from the borrowers. It's also pertinent to note that these 4 individuals were investigated by SEBI. The appeals tribunal in 2002 has actually given a ruling in favor of these 4 individuals. And we will share the link once the transcript is on the site. One of the other issue pointed out relates to an insider trading case which was settled with SEBI regarding the Ranbaxy acquisition. Let me clarify that Sun Pharma has not been involved in any insider trading norm violation relating to Ranbaxy deal. However, there was some minor technical issue relating to a procedural aspect of trading window closure due to intervening holidays. Many of you would recall that the board meeting for approving the Ranbaxy acquisition was held on Sunday, and hence our lawyers advised that there is no need to announce a trading window closure since stock markets are always closed on Saturday and Sunday. SEBI later on ruled that we should have announced a window closure. This case was settled with SEBI without admission of guilt in accordance with the provisions of applicable law, and the matter was closed. It's also important to note that none of the insiders traded in the Sun Pharma stock, even if the window closure was not announced. There is also a point raised of myself buying shares of Natco Pharma in my personal capacity from a company known as Orange Mauritius. I wish to clarify that this transaction has been disclosed by me in the stock exchange when we entered into the transaction. I am not aware as to from whom I bought the shares. However, I have a great deal of confidence and respect for both Mr. Chaudhary and Rajiv, and believe that the company was likely to do very well. I still continue to own these shares because this investment was made as a long-term investment in my personal capacity. There is also an issue raised on Sun Pharma's domestic formulation business being routed through a related party. Many of you have also sought clarification on this. Let me explain. Our domestic formulation sales are undertaken through Aditya Medisales Limited, which became a related party in FY18. However, domestic formulation business transactions with AML have been in existence for many years. Transactions with AML are reported as related party transactions in FY18, but not in previous years, since AML was not required to be classified as a related party prior to 18. AML became a related party in FY18 due to the consolidation of its shareholding among fewer entities as compared to in the past. We had also taken shareholder approval on this in our 2017 AGM. These transactions cover sales made to AML in FY18 and consequent receivables. The financials of AML are available in public domain, for which it is evident that AML does not enjoy any significant profitability. For FY18, following were the key financials of AML. Sales of 8,000 crore, EBITDA margin of 1.7 and net profit margin of 0.4%. So in line with the distribution business profitability as I see. Sun Pharma's relationship with AML is on arm's length basis. As investors have expressed a concern regarding this arrangement, we are in the process of discussing various other options for undertaking domestic formulation business. We are open to the idea of changing this distribution if, based on our interaction with investors, we get a feeling that that is what will make them comfortable. Other points raised include Sun Pharma giving guarantees to Suraksha Realty. Now this is factually incorrect. Sun Pharma has never given any loan or any bank guarantee to Suraksha Realty. Since at any point of time. There are also concerns raised about our tax rate being low single digit. This has been many years, and now our effective tax rate is in mid-teens. We've guided many times in the past quarters that our tax rate will gradually inch up in the coming years as the manufacturing facilities which are in tax exempted locations will start getting taxed. Finally, we come to the recent news about report of a whistleblower complaint filed against Sun Pharma with SEBI. We've clarified that as of now, we have not received any query related to this from SEBI, and we are not aware about any whistleblower complaint filed against Sun Pharma excepting the press article that all of us have seen together. Reopening of insider trading case by SEBI. We've not received any information from SEBI regarding this and hence are unable to comment at this point now. We've also some queries on loans and advances given to non-related parties which have increased significantly in FY18. These are loans and advances given in the normal course of business at arm's length basis at market interest rate and market terms and conditions. I hope that these clarifications will be useful to investors in understanding these issues in a better way. We now open the floor for question and answer.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may press star and 1 on your touchtone telephone. We have the first question from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead. Mr. Nitin Gosar from Invesco Mutual Fund, you may go ahead with the question. There seems to be no response from the line of Mr. Nitin Gosar. We'll move to the next question. The next question is from the line of Wesley Wong from Oxbow. Please go ahead.
Hi, how are you? Thanks for taking the time. I had actually a very specific question related to your last comment, where you mentioned that certain loans were made at market rates on an arm's length basis. Can you be more specific? When I look at page 162 of your annual report, under loans to employees and others, on a year-on-year basis, there's been an increase from 670 million rupees last year to 22.4 billion, or almost $350 million. Can you explain the nature of this $350 million, who it was lent to, and why?
No. What is the question?
The question is the nature of the 22.4 billion rupees of loans disclosed on page 162 of your annual report made to employees/others.
Yeah, so I think it is classified as employees and others. So that's what I said, is that it's a business loan given to non-related party, which has increased significantly. And I think we've been interacting and talking to shareholders over some time. And based on this, and if there is a sense and that this is not in the best interest of shareholders, then we will see what best we can do to reverse the transaction if that becomes necessary.
Well, that wasn't my question. My question is, what is it? What is the nature of it? Who are you lending to?
Yeah, so I think the challenge which I face generally in responding to questions is that there are informations which are material to interest of business. So I can't share some materially important information which is specific for business. So I am not able to give you more information about who the money is given to. However, I understand your concern which you have, and we will try and address this concern at the earliest.
Thank you. We move to the next question. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, Dilip. Thanks for the clarification. Just one question on Aditya Medics. Broadly, it's understood that Aditya Medics does clearance CNF work for the Sun Pharma. And broadly, it's been the principle, or broadly, the industry follows this practice as well. The CNF agency has been provided to family and friends. How do you see this transaction, and what are the options available for you to address the investor concern if investor wants you to unwind this kind of transaction?
No, I think we can either look at Sun taking over the distribution directly, or buying or acquiring Aditya Medicines at cost. So we can look at multiple options.
Okay. And one more clarification on this. Does the...
Let me clarify. I think historically we've always believed that having Aditya Medicines represent Sun as a distributor is in the interest of Sun Pharma shareholders. I think finally if the sense is that this, for the purpose and comfort of transparency, it needs to be clarified, then we will look at option of discontinuing with the this arrangement.
Okay, got it, sir. And one more clarification. During the result con call, you mentioned about some readjustment in the domestic sales. Is that got anything to do with the Aditya Medics?
Yeah, most likely that is the way it would have been, is that when the GST was introduced, I think inventory with Aditya Medicines would have gone up a little bit, which based on the focusing on controlling working capital, that inventory would have been rationalized.
Okay. Got it, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Gaurav Gupta from EQ Alpha Advisors. Please go ahead.
Hello.
Yeah, hi. We can barely hear you. Could you please speak a little louder?
Just wanted to understand the role of Mr. Walia, because besides Sun Pharma, they are involved in 28 other companies, including Suraksha Realities and some other ITI Fortune Group involving in finance and other businesses. So besides, he is the executive director in the company. So what exactly his role in Sun Pharma now?
So I think Mr. Walia is involved in terms of advising on finance, as well as tax planning and strategic directions for the company.
Okay, so they have no other role besides the, finance part in Sun Pharma, you are saying?
Yeah, other than these activities, I think he has no operational involvement with any part of the business.
Is their remuneration is not commensurate with the kind of services they are providing to Sun Pharma, because they are in line, because they have got some variable component also, because this year they even don't get, because they have not posted the profit on a standalone basis?
No, let me understand. What is the question?
The question is, they also got variable remuneration also from the company. So the kind of profile you are explaining, because they are managing the finance part of the company. So, they are not matching the thing actually.
So is the question that is Mr. Walia overpaid, or what is the question?
Just wanted to understand their variable component.
I don't think Mr. Walia has any variable component of paying in.
This quarter they didn't get, because Sun Pharma didn't post the profit on the standalone basis. Otherwise, their terms of agreement is having the variable.
What is the source of your information?
I'm sure annual report on it.
No, because I don't think even I have any variable component. Do I have any variable component in salary? I don't think so.
Okay. Okay, thank you.
No, but for sake of clarity, I think amongst all the Indian pharma companies, I think if you look at the salary drawn by me or Mr. Walia, then we would be amongst the lowest paid executives. So,
yes, absolutely right, sir. That is true. Okay, thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, good evening. Sir, just on the FCCB issue, I'm not so sure even if JP Morgan was the lead book manager, why have someone, Jerem, as your co-book runner? And is it true that what the article suggests is, as per SEBI's order of 2001, Jerem had connection with Ketan Parekh and Dharmesh Doshi?
So Samir, I think I'm not able to respond because these are old information, so we don't have this information with us. What I think also, Samir, you would remember because you've been tracking us since a long time, is that in 2004 when we raised the FCCB, we were only a 1100 crore company, which is, let's say, 3% of our current turnover. So I think in last 14 years, regulatory framework, laws, expectations of transparency, corporate governance, everything has changed significantly. So to apply today with retrospective effect and revisit many of the decisions which management will take, I think we put unreasonable burden on people, because whatever that I decide today is based on the law which is as I see today and of a company that I am managing today. So tomorrow if we become, let's say, 5 times, 10 times, in case of this we are today almost 25, 30 times bigger, then very different organization, different expectations. So I want you to be what you call factoring this also as a business reality.
Yeah, sure. And second question is on Aditya Medisales. So is it fair to say that the company is owned by the promoter group? And is it a norm for for the industry, for the pharma companies to do domestic business through such entities?
No, that is, I'm not aware about other companies. My advantage, I think, has been that I have always looked at finding a way by which how do I create a more tax efficient and efficient structure. And I think creating that through Aditya Medisales has helped. Now, I don't think many companies or maybe any other company may have a similar structure. And as I explained, I think if it helps investors have great, because clearly the decision to do this in my head is with a view to help Sun Pharma become more successful, not with a view to do anything else. So if that is not something which is shared by other shareholders, then we are open to make changes.
So just follow on this. So you mentioned that you are open to changes. You may acquire it or you may do some other things. So the impact of that or the fallout would be that your tax rate goes up quite meaningfully?
No, it will not make material change. Because I think that's what I said, that laws keep on changing. So now we have GST and many other changes. So I think the impact will be very different today than what it would have been a few years back.
Okay, fine. I've got a few more. I'll get back in the queue. Thanks.
Yeah, thank you.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for giving me the opportunity. I couldn't get the part on it, Aditya Medisales. You mentioned that till FY17 it was not a part of the related group, related parties. Now in FY18 it has become. So I actually missed as to what changed between FY17 and FY18.
So what I explained is that there was a consolidation of shareholding of the shareholding of AML amongst fewer entities than in the past because some of the investment companies holding equity were merged. in 2017, we took shareholder approval in the AGM for continuing to get the distribution business through Aditya Medicines as a related party. That was also a transaction which was approved by more than 95% majority of the independent shareholders. Now, if it is felt that that is not in the best interest of the shareholders, because there are now some concerns that were missed at that point of time, we are open to make changes.
Yeah, no, that is fair enough. So before that merger happened, so who was the promoter of Aditya Medicines? Now I understand it is the promoter of, all the promoters of Sun Pharma would be the promoter of Aditya Medicines. But before that, who was the promoter?
No, I think the equity was held in different investment companies, and these investment companies got consolidated.
But these investment companies belong to promoter groups earlier as well?
That is correct.
Okay. Okay, fine. Thank you.
Thank you. A reminder to our participants that you may press star.
That is Dilip Shangvi of Sun Pharma. Remember, the shares of Sun Pharma continued to be under pressure on the back of reports that SEBI was reopening the insider trading case. The company there clarifying, saying that they have no information about SEBI reopening an insider trading case. Whether it is happening or not, they have no information. They don't have any information on the whistleblower complaint that has alleged wrongdoing either. Those are the two clarifications that have come in from Dilip Shangvi, including others, basically on some of those critical issues that have been raised, loans to employees and others, which has gone up significantly, an acknowledgement there by the management that yes, they have gone up significantly, but and I'm quoting Dilip Shangvi saying that if necessary, these can be reversed. That's one as far as loans to employees is concerned, and the other on Aditya Medicines, which has been the other point of concern that has been raised, again suggesting that if shareholders want things to be changed on this front, which already has now been made part of the promoter entity group from FY18 after a consolidation of investment companies, and changes could be made here as well. Archana, very quickly, the key concerns that were raised by investors and analysts, and what do you make of the response that's coming from Sun Pharma?
Well, if we, go by what Mr. Dilip Shangvi has said, one, he certainly has no information about the whistleblower letter, the document shared with SEBI, and they have not received any confirmation or any word from SEBI as far as reopening any case is concerned. He has also very categorically denied, any transactional. He has agreed to transactional details with 4 individuals, and the ones that were written, the report suggested were Ketan Parekh and Dharmesh Doshi, who are the banned traders, and he says. And he has agreed that there were some unsecured loans that were given to 4 individuals on which SEBI was investigating a matter. But he also says that that amount was very small and the loans were recovered and the loans were given based on the applicable laws around that time. And he also indicated that in 2002, the appellate tribunal had actually, given a clean chit to the 4 individuals mentioned there. So that was an important contention with the investors, because the association with banned traders like Ketan Parekh and Dharmesh Doshi was a big overhang for investors. The other bit that you talked about, Aditya Medicines, has been a big question and concern, because there has been, consolidation of shareholding amongst Aditya Medicines, and now it has become a promoter-driven company, and it is still doing business for the company. What we also have to see that Dilip Shangvi was, accepting certain decisions which he had made in the past years, and he said that if it favors the investors and reassures them, he is willing to look at a change in the way the company has been operating, whether it is to do with Aditya Medicines and them looking at the CNS business and the domestic formulation business for Sun Pharma, or when he spoke about the audit firm Valia and Timbadia that actually looks into, that audits some of the smaller subsidiaries of Sun Pharmaceuticals. Now, there has been concern that this firm was, involved in some rigging cases, and SEBI was investigating this company in the past. while he agreed that, this company is looking into very small subsidiaries, the subsidiaries hold only about 0.6% of the consolidated revenues for FY18 for Sun Pharma. They are not material, but he also said that if it reassures the investors, they will look at a different, audit firm or bringing in additional audit firms to look into those. Yeah. So what overall, he's trying to actually bring more assurances for the investors here on the call.
Yeah. That is true, but more importantly, he's also suggesting that if need be, changes will be made. That is what Dilip Sanghvi has said on several of those contentious issues that have been raised, that if need be, changes will be made. But Archana, go back to listening to that call. We'll come back to you and get reactions from analysts on what they make of the clarification that's come in from Sun Pharma.